Good morning, ladies and gentlemen, and welcome to the Alpha Financial Markets Consulting PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so, and these will be available via your Investor Meet company dashboard. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from Alpha FMC. Luke, John, good morning.
Good morning. Thank you very much, and hello everyone. I am really delighted to be there today with John Payton to introduce Alpha FMC. As a recently appointed CEO, I am very excited to take the helm of Alpha and have the honor of leading our fabulous team. Maybe if you can go to the next slide, just poof, this way. Yeah, so to briefly introduce myself, I have a master's degree in engineering from École Centrale in France, and I also studied more recently at Stanford University, where I followed an executive program for high growth companies. I started my career as a consultant in Paris, then in London. Then I joined UBS in France, where I was head of change management. I joined Alpha back in 2010, so 13 years ago. I created the Paris office at that time. Then I've been head of Europe, and over the last 3 years, I've been global head of asset and wealth management consulting, which is at the moment the biggest business at Alpha. And I've been group CEO for 6 months now. Can I hand over to John?
Morning, everyone. John Payton, CFO at Alpha. I joined almost 6 years ago, and also been helping across a range of topics from strategy, M&A, and the growth of the business. I have 20 years experience across corporate finance, banking, audit, etc. Qualified with KPMG way back in the day. And my history has been across sort of PLC advice, debt and equity, capital raisings, M&A, etc. And prior to Alpha, I worked at HSBC in their global banking and in their commercial banking divisions.
Perfect. So today we'll introduce Alpha. We'll present our story, our strategy. We'll explain the fundamental long-term drivers that support our market. We'll cover also main financial highlights. And finally, we'll wrap up the session with a summary to explain why Alpha represents a very solid investment case. So, to the next slide, and over to you, John.
So let me just take you through briefly an overview of Alpha. And overall, we have around 1,000 specialist consultants today in financial services, both in asset and wealth management and the insurance sectors. We operate globally across 17 offices across all of the key geographic regions, and it's the largest dedicated specialist team. And that focus and specialism is really part of our success. We deliver quality on our engagements, and we build those client relationships through that delivery. That leads to a strong reputation and repeat business over the years. And if we picked a few points out on the right-hand side of the page, the business is 20 years old this year. It has grown substantially over the years. And we work now with a full spectrum of clients, from those with a few billion of assets under management, right the way through to the very largest globally, the Vanguards, the State Streets, the Fidelities, the Amundis in the asset management side, or AXA, etc. in insurance. We compete against the big four accounting firms and Accenture, and we compete in quality. Our specialist teams have the relevant delivery expertise, and that builds strong client relationships, strong client endorsements, and repeat business. We're clearly a project business. We deliver projects for our clients, and that includes implementing IT systems, replacing front office operating platforms, looking at total operating model reviews for clients, M&A integration projects, outsourcing decisions, etc. And that's both management consulting and also an element of technology consulting, of which more shortly. And these can be big, critical projects for our clients. And they are, again, quality is the key. Delivering on time and on budget is key to these projects. There are some good industry tailwinds which are very helpful. Our clients are trying to reduce costs, replacing outdated IT systems, increasing regulation, drives process and system changes in our client base, as well as a growing market, both in the asset and wealth management side, assets under management growing, and the insurance market also growing. And why have we been successful? Talent. We have built our business on recruiting and growing the very best consulting talent. We do this by rewarding well through good remuneration, bonuses, but also a focus on culture. Lots of focus on investing in our people. We are a people business. And our teams work hard, but we also celebrate success and enjoy that together. And more on that later. But that is key. It keeps our people, it retains our people, and retains that knowledge within the business. So all of this talent retention builds the team, delivers for our clients, grows our reputation, and that has led to strong historical growth over the years, almost 30% revenue CAGR since IPO, as we've taken market share, expanded our service lines, and expanded geographically. And that's been mainly organic growth to date. Our two largest acquisitions have been Axis in 2019 and Line Point, a North American alternatives investment consulting business in 2021. And typically that's delivering over the whole group is delivering 20% adjusted EBITDA margin. And again, more on that later. And finally, in terms of the balance sheet is a strong position. We have a strong net cash position at year end and today. So that's Alpha at a glance, and I'll hand over to Luke for more of the detail.
So Alpha, so who we are, our purpose is really to deliver outstanding outcomes for our shareholders, our clients, our team, and the wider society. We are working really hard to deliver tangible results for those stakeholders. Our ultimate vision is to become the best consulting firm in financial services worldwide. We are very ambitious, we grow quickly, but we also keep an extremely disciplined approach to growth. So step by step, brick by brick. So it starts to be the best consulting firm in the sector in which we are today, so asset and wealth management, and also now insurance. Then we'll expand to other sectors within financial services, corporate investment banks, retail. So what we do, there are essentially, as John said, two types of consulting within Alpha: management consulting and technology consulting. So management consulting is today the majority of Alpha services line. This often involves running large transformation programs for clients. Our consultants project managing and coordinating the program work stream, supporting key programs decision with the appropriate frameworks and methodologies. This can be relatively small teams of highly skilled management consultants coordinating larger program teams. Technology consulting is more operationally focused assistance. We have people who understand how to configure the IT system for the client needs. So how we do it, this is our best decks. So the best talent, as John said, we hire, train, and retain the very best talent in the industry. We are a people business, and our unique selling point is really to have the best people. Expertise. We equip those talented people with the right skill. We pride ourselves to have the best expertise. While it may sound an easy statement to make, all consultancies could claim the same, but actually it's not that easy. At Alpha, we really specialized our consultants from the very beginning of their career. They will do projects in only one sector. This is the only way to really have expert people very quickly. After 5 years, our consultants are typically promoted to the manager grade. They lead projects and advise our clients. They do that very early in their career because they have accumulated a deep knowledge working for many different clients on many different topics, but in that very niche sector. So there is a cost attached to this model because when a consultant is free, not being chargeable, we do not deploy that consultant to another client type in another sector. We actually prefer to use that downtime to provide training or ask that consultant to work on a research paper. We keep investing on that individual to improve further their level of expertise in a niche space. So we do sacrifice short-term revenue optimization to differentiate ourselves on the long term. This is how we outperform competition, and this is the way we develop a profitable business on the long term. Culture, Alpha prides itself on its strong culture. We try to look after our people, so not only it is to paying our people well with a good team-based bonus structure across the teams, as its heart, Alpha is a meritocracy. So good people in Alpha progress well within Alpha. We recognize and reward talent. We also have fun and encourage a good company events culture, as well as our approach to all things across training, D&I, etc. All areas where we spend time. As a result, our attrition level is very low. We retain those good people, talented people with their focused expertise. Service, so the best service, all of this goes to ensuring the highest quality service to our clients. Therefore, clients come back to Alpha for this high quality service. I now hand over to John.
And very briefly on the global footprint of Alpha today, we truly have a global footprint now, 17 offices across all of the geographic regions, and you see those 1,000 consultants broadly very well spread across the key regions. The UK team remains our largest team. We were founded in the UK 20 years ago, and we've grown the business to a market-leading position, firstly in asset and wealth management, and now more recently in insurance. And in the UK, building out the insurance team is probably the quickest area of growth currently. In North America, we have founded and grown that business in recent years to a very similar scale to UK team size. North America team have enjoyed significant growth over recent years as we focus there. In our heritage asset and wealth management market, the market there is 7 or 8 times the size of the UK, and we see significant further potential across asset and wealth management consulting and the insurance consulting markets for further growth. 20% of the team broadly is in Europe, across several markets across Europe, and we've just recently opened an office in Frankfurt in Germany, another major financial centre. And finally, APAC, we have a team of around 50 consultants, and most recently have added the Shoreline acquisition in May of this year, which almost doubled the team size in APAC and gives us the largest dedicated asset and wealth management consulting team in the region. So that's the business today, almost 1,000 consultants and truly global in its spread.
So we have enjoyed strong growth over recent years, and we actually aim to double the business again over the next 5 years. We can explain our growth journey across various axes. One is the consulting type. You can see on that slide, management consulting and technology consulting. Then on the x-axis, the sector, where we have now asset and wealth management and insurance. And on the third axis, the z-axis, is geography, where we have North America, UK, Europe, and APAC. And the shading of the box shows the level of maturity on each market. So we started 20 years ago in the UK on one very niche sector, asset and wealth management, and on one type of consulting, management consulting. To now, today, where we have expanded globally within asset and wealth and deepening our offering within geographies. More recently, we moved into insurance, so 2 years ago, first in the UK, then in France, and very recently adding few people to start to focus on the North America insurance consulting market. Finally, technology consulting was added initially via acquisition, and our expansion over the next 5 years. We see growth from these existing areas. Deepening our geographic strength, so particularly in North America, which is a major market opportunity for us, and building further our insurance offering globally, a second growth market pillar. And then, of course, we also want to expand our technology consulting business across geographies and sectors. So you can see on that slide the market we are targeting, the market in which we are a leading player, so we are more mature, and the market which are still in a very high growth mode. So our focus for the next 5 years is that block on the right-hand side. So 2 sectors, asset and wealth management consulting and insurance, 2 types of consulting, management consulting and technology consulting, and we want to do that globally. On the next slide, so on this slide, we provide more details on what progress has been made last financial year and what we are focusing on now. As a video will be available online, these slides provide more details on what we do for those who are interested. I would like to highlight one point, which is our inorganic growth strategy. The main growth engine at Alpha is definitely organic, but we complement that growth with bolt-on acquisition when relevant. So the key really driver, our growth strategy is to be positioned on markets which are growing and also winning market share on those markets, providing a unique specialist consulting proposition. There are 5 key pillars that really drive the growth of consulting demand on the long term. One, the first driver is a continuous growth in assets under management and insurance policy. With rising living standards on the planet, the amount of wealth, pensions, people to insure, new risks to insure are constantly growing. This means that our clients grow, develop new markets, develop new products, have new risks to manage. This in itself drives the need for transformation and consequently the need for consulting. Second driver is regulatory and compliance framework that evolves at a rapid pace. This requires our clients to constantly adapt their operating model, their processes, IT platform. Third, the cost pressure. The competition in asset and wealth management and insurance is fierce. This creates a tremendous pressure on fees and consequently on cost. It is a huge challenge for our clients. Some choose the M&A route to make economies of scale. As you can guess, those projects create a significant demand for consultants. Others decide to use technology to achieve major efficiency gains. That's what we call re-platforming programs. Again, those are major change programs. 4 is clients and society expectation, which are changing faster than ever. And this is driving a paradigm shift in insurance and money management. For example, the rise of ESG means that investment performance and investment risk are clearly not the sole criteria to measure success. Another example would be end client expectation in terms of digital experience. All of this is driving major change. 5 is really technology breakthroughs. So the last but clearly not the least. Technology offering is evolving extremely fast and offers significant opportunities for our clients. New technologies like blockchain, cloud, OpenAI, new data management systems like Snowflake bring a completely new way to manage data. The adoption of what we call enterprise performance management platforms with systems like Anaplan brings a new agility in strategic planning. And of course, AI, predictive modeling, machine learning, generative AI. The pace of technology breakthrough is actually accelerating. This creates fascinating opportunities for our clients to be more agile, to have access to the right knowledge, the right data at the right time. So it creates opportunities to make, I would say, real quantum leaps in efficiency across the entire value chain. And choosing the right technology, the right architecture for the right use cases, this is extremely complex. Implementing those technologies is also incredibly complex. All of that drives demand for consulting.
Thank you, Luc. And very briefly, I'll cover some of the financials and latest trading to wrap up. And here we see the results page from our 31 March results published in June. I won't dwell too long on this page, but simply to say that FY23 to March 23 was another record year. You can see that revenue and profits were up almost 40% overall, driven by that strong client demand and as we increased our consulting headcount strongly globally. On the bottom left, you can see our cash conversion, which has been over 100% since IPO annually, as we tightened the working capital position year after year. And in FY23, there were specific one-off factors that lowered that conversion to 74%, which included moving to quarterly tax payments in the US market. Alpha is clearly a capital light, cash generative business model, and we should continue to generate strong cash conversion, and we guide to 85% plus conversion for FY24. I note in passing, if some follow the interim results in due course, that our first half, our H1 conversion, is always lower, given that we pay out our annual bonuses for the prior year in the first half in the summer months. And finally, in this page, our dividend policy, bottom right, is to pay out 50% of cash profits, approximately 50% of adjusted after-tax profits. So the dividend also rose broadly in line with the profit measures. And then, if that was FY23 and last year, moving then to the latest trading statement, which you've probably recently seen, our pre-close statement on 10th of October, and we show that in full here. And just to say a few words on latest trading. So along with the good results last year, in the June results announcement, we also reported that we were seeing a longer sales cycle and a more competitive environment as we came into the new financial year. And this has transpired over these summer months. We believe this to be a largely short-term market rebalancing, which is mainly a result of overhiring in the wider consulting market. We still enjoy a good pipeline, ongoing good client demand, albeit with this slower conversion rate over the last 6 months, we've seen relatively consistent monthly wins coming through. Importantly, we've held our rates reasonably well versus the competitors who are taking some quite discounting actions through this period. And we, in response, have been hiring selectively into this market environment. The teams globally are now reporting an improving market sentiment, and we are continuing to monitor monthly the sales ones very carefully and are hopeful of an improving second half. At the first half, we have guided in this statement, you can see, to around 20 million of EBITDA in the first half. You'll see from the numbers that the top line is growing around 8%, half on half comparatively, but at lower margins. And we reiterate a full year guidance in this October statement of around market consensus of 48 million adjusted EBITDA, which clearly implies a stronger second half weighting as the demand comes through from clients, lifts utilization and improves margins and the second half performance. And our next market update is scheduled for the H1 interims, and that's on the 23rd of November. And then finally, just to wrap up the presentation, to summarise the investment case, which hopefully is coming through all of the various sections today. I think we've talked about the strong track record, growth in net fee income since IPO and before, good profitability and cash generation. Dropping down the growth opportunity, we've set out that the industries in which we operate are growing. There are structural growth drivers, as Luke stepped through, that underpin the client need for our services, and the ambition there on the back of that to double the business again over the next 5 years. And how is that supported? As Luke touches on, our talent, expertise, culture and service, underpinning the model, hiring the very best and retaining the highest calibre of people through a combination of reward and culture that leads to very low staff attrition and indeed good rankings by our employees of the quality of the environment. That obviously is our expertise, our highly specialist teams. We are a people business, and that delivers the best client service, builds our reputation, and allows us to have repeat clients and cross-sell new specialisms into new areas. So that, I think, is a summary of where we are. We've done this before as we've grown the business, and we have a strategy to do, as Luke says, more of the same in North America, insurance, in technology consultant, to repeat the model and double the business again over the next 5 years. And I think that now concludes the formal slide deck and presentation, and probably can move to Q&A.
Perfect. John, Luke, that's great. And thank you very much indeed for your presentation this morning. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team take a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Luke, John, we did receive a number of pre-submitted questions ahead of today's event. And as you can see there in the Q&A tab, we've also received a number of questions throughout your presentation this morning as well. So firstly, thank you to all of those on the call for taking the time to submit their questions. And John, if I may just hand back to you to chair the Q&A session with Luke, and then I'll pick up from you at the end. Thank you.
Sure, thank you. And taking various of the questions, where should we start? I guess in terms of geographically, a question of where do we expect to see the fastest growth going forward? Luke, do you want to pick up on growth dynamics and the strategy?
Yeah, happy to. I would say definitely North America is the biggest region in terms of revenue today, but also the biggest region in terms of opportunity size. So that's where I would say the growth will mainly come from in the years to come. So definitely North America.
Perfect, thank you. And probably sort of countering that with growth in terms of risks, and coming off the current environment. A question around the risk. What do we see as the main risks facing the group at the moment, and how are we mitigating those risks?
Yeah, I would say the main risk is probably on culture. So I would say typically acquisition in the consulting world as a people business and with business with strong culture, it is maybe trickier to really make sure that acquisition are definitely a success. So that's why we are super disciplined in our inorganic growth strategy. We really want to acquire businesses that are complementary to us, but also will really share the same culture. We have seen over the last 30 years some failure in terms of M&A in the consulting space. So we are very much conscious of that, and we are actively managing this risk. The second risk, I would say, is always on delivery. So we pride ourselves to have outstanding delivery for our clients. We absolutely need to maintain that very high standard because it is our main growth driver, is our reputation on the market. And we have grown way above competition because of that delivery excellence. So that's, I mean, as we grow, we need to maintain the exact same level of delivery. So that's the second risk, I would say, but which is carefully managed and mitigated.
Yes, agreed. And shall I take a couple of related questions around attrition? What are the attrition levels? How is the labour market today? Salary inflation, demand for consultants, and retaining talent. So a few questions in there. Maybe if I start and look if there's anything to add. I mean, attrition rates typically have been in single figures for Alpha over the historical years. In terms of unmanaged attrition, people leaving Alpha, it can be single figures and indeed mid to low single figure attrition levels. I think we saw some pick up through the COVID period. I think as all businesses did post COVID, and that returning and reassessing lifestyles. But overall, our attrition is still back to as he's back from those COVID highs, and still remains, I think now in around sort of early double-digit, high single-digit attrition, which compares to a market landscape of probably 20% plus attrition levels in the Big Four, etc. So I think our attrition remains very good. I think very importantly, our attrition, if we can call it such, tends to be good attrition, if there's such a thing, in that our staff don't tend to leave to go to the competition. We have very few cases of that. They tend to leave to go to clients and move into industry and have a change of careers, which builds actually a network of ex-Alpha employees through our client base and prospective client base. So in some respects, that is a good attrition to be having, but we have very good attrition overall. In terms of the pool of consultants, there is a deep pool of consultants there. I think we're hiring from a deep pool generally across most grades. We can take a raw consulting talent and shape that into our sector and our niches. That probably becomes more selective in recruitment and trying to find people at the more senior grades, and can take longer to find the right individual with the right skills and fit with the team. I think in terms of acquiring talent, we've continued to grow the business through last year, and have added again selectively this year, and are able to find the right talent to grow the business. And I think the environment generally for inflation and costs, clearly there was some inflationary pressures 12 months ago. I think our average pay rise across the group netted out at something like 6% overall across the group. I think the inflationary pressures probably are easing globally across most industries and regions, and we're hopeful that is a better environment as we step through the next 12 months. But certainly our packages and our offering and our reputation of being a fun and good place to work is it still stands us in good stead to be able to attract the right talent. Anything else on that, Luke, or should we go on to the next question?
No, all very clear. So let's go to the next question.
Excellent. Competitive landscape, Luke. As we double the size of the business over the next 5 years, how are the competitors evolving in our chosen verticals, and how do you see them responding to our growth and etc.?
Yeah, good question. I would say from the very beginning, we have been competing against the Big Four or the Accenture, the Capgemini, and we have outperformed them on quality and expertise, as we said. And this remains very much the same. They've got a business model which is much more a generalist business model. We've got a different business model, which is a specialist business model. And I think the key success driver for Alpha remains the same. So we'll continue to outperform them on quality and expertise as we grow in multiple regions, multiple countries, multiple verticals within financial services. And actually, we have demonstrated that we can go after a different sector within financial services, which is insurance, and we've got very good success in that space. So we will repeat exactly the same business model, going after 2 types of consulting, all the regions worldwide, and progressively more and more sectors. So I would say the competition landscape is going very probably to remain the same, with those very big companies being generalists and us being the specialist player taking market share.
Understood. And maybe a follow-on from that is within insurance, are we seeing competition from actuarial consultants? And I guess more generally, who is our key competitor in the various markets? Is it the Accentures or the McKinseys, etc.?
Yeah, we see a very similar pattern. I would say in insurance, we have the Big Four. We've got Accenture. Actuarial is a very good question. So today we don't offer actuarial services, but we are thinking about it. It is a slightly different service, business model, risk profile, but we are analyzing this very closely. So we don't compete against actual companies today because they provide a very different service to what we propose, which is more a standard management consulting with a very specialist focused. But this is an area we are investigating for the future.
Thank you. And Luke, on acquisitions, we clearly made the acquisition Shoreline in APAC, but our strategy is emphasizing the growth in North America and insurance. And there's a question around how does that APAC acquisition fit within the strategic ambitions for the next 5 years?
Yeah, I mean, that acquisition is very much a small acquisition. it is more about consolidating the market in APAC and more precisely in Australia. So Shoreline was 18 to 20 people, I think, in total. So this is very much a very small acquisition. I think Shoreline was really sharing the same passion for expertise, delivery, culture. So we thought it would make sense to consolidate the market and being really the sole leading player, especially in Australia. So this is clearly not an indication that our strategy is more to focus on APAC. This is just, it makes sense for the APAC region to make that acquisition, but the focus in terms of a very big growth and magnitude growth is definitely remains the same for North America.
Agreed. And a follow-on, which I can probably add to in terms of acquisitions and structure, is we typically are buying on a sort of 6 to 8 times multiple of EBITDA, very broadly, and we're structuring our deals generally with deferred payment and earn-out, with some payments on completion and some then spread over the following 3 years, both deferred and earn-out, in that the earn-out is driving the vendor management to be growing the business, very much aligned with what we are trying to do as well. So we're both locking in the teams for a period of time and also aligning their goals to drive growth. And we have a reasonably active list of acquisition targets. Obviously, you can't time exactly when they come along, but I think, as Luke says, we can enter into new markets, new skills areas through acquisitions and accelerate that growth and deploy some of our capital effectively in accretive acquisitions at the right time. And then moving on to the market, probably generally in terms of asset managers and fee pressures. Luke probably got to our pricing. Asset managers are seeing fee pressures, and the big four are competing on price. How is that feeding through to our price discussions, and is it more outcome driven? And maybe if I start, and Luke, if you wanted to add, that I think exactly right. I think we have managed to, over the last 6 months, as you see in the trading statement, hold our rates fairly consistent through the first half. We are not managing to push through our price increases or salary increases this year quite as easily, but obviously are trying to do so and maintain the rate card as much as we can. What we are seeing is some sometimes anecdotal experiences through the summer of quite aggressive price actions, or indeed resources being offered for very limited amounts as on projects to try and get a foot in the door to a project. And I think where we're very pleased that we're able to hold our rates consistent through this period. And I think what we've seen in the past is that while through a more challenging market, these actions can be taken, they're not a long-term business model for our competition, and ultimately a more normalised position returns. And also the clients, as we've talked about today, enjoy the quality delivery from Alpha. And while price is clearly a factor, the quality which Alpha delivers, ultimately when you come back to the main phase of the project to deliver, that is where we tend to see our teams being re-involved with clients and us back into those discussions. So pleased with where we are today. We hope the market clears over the short term, and that our positioning in that market and our reputation stands us in good stead with our clients. Other questions? Where else shall we go? One more on talent, perhaps, Luke, in terms of AI, blockchain technology that you referenced. Are there challenges there on getting staff, people with the right knowledge into the business?
Well, yeah, that's a very good question, because I think there is definitely a war for talent into the data science and artificial intelligence space. I would say this is also true for everybody. Typically, generative AI is so new. Nobody can say that they are really expert in generative AI. I think we all learn on those technology. So generally speaking, I agree that data science in general is a difficult space, but we do have very good people and continue to recruit in that space. More generally speaking, I would say that everybody in the industry needs to train and learn how those new approach to AI work, and will do the same. What we will bring on top of that is very much a very sector-specific expertise that makes our offering very much unique in that space.
Excellent. And then probably in the final question or two, I think, which area of the business are doing particularly well currently? And I think probably if we start there, I think in the statement you can see our Line Point acquisition has been a super success. I think that probably is a one to call out. The alternative space we saw as the fastest growing area when we acquired Line Point in the market, and indeed that gives us good exposure to that space, as well as doubling our North American footprint overnight, and that has been a super acquisition in both of those fronts as we anticipated. And the alternative demand across our business remains good, but the alternative demand remains particularly so. The Line Point business has doubled its headcount, more than doubled its headcount since we acquired it a couple of years ago, and enjoying good demand across a number of fronts, and expanding in North America and elsewhere. So I think that's probably the standout, but we also have growth, as you see, across the regions in the first half. And then is there anything to wrap up? An interesting one on probably in the business model, actually, Luke, in terms of fines and litigations, and how we're positioned there. Is there any history of fines litigation from clients towards consultants if they took our advice and it didn't work out as we had advised? How does that work?
Fine litigation. I mean, just to make sure I understand the question, is that helping our clients on managing that kind of dispute with a competitor, with a provider, or with the regulator, or is that with us?
So I think that is, the question is asking about us. Can we be sued for poor advice?
Okay, right. Yeah. So I think very little, and we are on top of this. As management consultants, we provide guidance, but it is always the decision of our client to make a strategic move. So we're really supporting them on their decision-making process. We don't take that decision. So typically, if I take a comparison with a lawyer firm, a lawyer is really formally and legally committing to legal advice. and can be sued if that legal advice was wrong. I would say typically in the space of insurance, we could also have the same with actuarial services, where the actuarial service commits to their model. So those models are much more risky because there is a legal commitment to the advice which is given, which is not the case for management consulting and strategy consulting. So on that front, the risk is very small for us.
Great. Thank you, Luke. I think that probably wraps up the large majority of the questions, and conscious of time. So, Jake, should I hand back to you and Luke?
Perfect. Absolutely. Thank you very much, John Luke, for addressing all of those questions that came in from investors this morning. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Luke, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments just to wrap up with, that would be great.
Yeah, thank you. Alpha has a very robust track record over the last 10 years. We are very conscious of test drivers that have supported this success. And I would say we are really capitalizing on those drivers to now actively drive the next chapter of our growth. Over the last 12 months and still now, the consulting industry is going through some turbulence. And you may have seen that all the majors are taking action to reduce their capacity. We believe that it is very much a short-term adjustment. After the booming period in 2021 and 2022, those players have recruited far too much. The demand for consulting services keeps growing and will keep growing for the foreseeable future. And I would say even the demand for consulting services will accelerate with all those technology breakthrough. So on the long term, we have a very clear strategy, and so we are extremely confident to double the business by 2028.
Luke, that's great. And John as well, thank you once again for updating investors this morning. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Alpha Financial Markets Consulting PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.
Bye.